Hi everybody, welcome to this Smart Chart Squawk Box session for the European markets. Hope you're all well and ready for another fantastic week in trading the financial markets. It's been a fantastic month so far. We started off the month with a lot of high volatility, big trends developing from the flows that developed across July and August. There was a bit of a lull in the middle of September as the markets were preparing themselves for the big news announcement, the US FOMC statement where they cut interest rates much larger than analysts were expecting. But now the volatility market has picked up, and last week was fantastic, and we're expecting some incredible trading opportunities this week ahead as well, as we see out the last month where we can actually get some really good end of month flows and repositioning from the institutional world. So let's have a look at the week ahead, highlight a few trading opportunities from the London and Sydney trading floors. Okay, so first up on the calendar, Monday, we have UK, German, France and US manufacturing and services PMI data. PMI stands for Purchasing Managers Index, and it's basically a survey, or it's an index of a survey of different purchasing managers across the different sectors in manufacturing, services. And what it does is it gives a leading indicator of the health of the economy and business conditions, because purchasing managers are people who are buying materials, spending, hiring. They are on the front line of what's going on in the economy and business conditions, and the economic data here can be a leading indicator of that. So it can become quite interesting if there are any significant changes to what the market is expecting, and that's the most important thing. When it comes to economic news announcements, we look at them for several reasons. First reason, most important, is risk management. We don't want to overexpose ourselves on a particular currency pair or a particular market when there's a high impact news announcement coming out, and it can all get a bit crazy and volatile, and the markets can turn the other way. We've got to protect our trading accounts first and foremost. Second reason we look for economic announcements is for any surprises. Are there any surprises in the economic data? Because if there are any surprises to what analysts and economists are expecting, then this is where we can get some really big moves as institutional players readjust their portfolios. And if there's some follow through on those moves, then we can trade those moves, and that's very key, the follow through afterwards. And also what it can do, it can help to cement long-term trends developing in the market, because if we have a fundamental narrative and a technical narrative, the combination of those things can lead to more higher reward to risk, longer term trading opportunities. So there's a few different reasons that we look at the upcoming economic data to help in our trading process. Now, with the PMI data, it becomes important for many intraday traders just to manage intraday volatility on any surprises, but a lot of central banks have been making their policy decisions based on economic conditions. So it does become quite important now regarding interest rate policy and the economic conditions, and is the economy worsening? It might lead to bigger rate cuts in the future to try and stimulate the economy. Is the economy stabilizing, which will then cause maybe central banks to actually hold interest rates and not cut them as aggressively as many people are forecasting. So if there's any trading opportunities around these different news announcements, I will do my very best to highlight them for you across these European and Asia session webinars. But make sure you are also tuning into all the live trading webinars throughout the day in the Smart Charts platform, so you're trading live with all the other traders and capitalizing on any potential trading opportunities in real time as well. Now, on Tuesday, we had the all-important RBA rate statement. That's the Reserve Bank of Australia interest rate statement. Now, it's widely expected they're going to keep interest rates on hold at 4.35%. And this is actually why we have been trading the Australian dollar, because over the past several weeks, we have been talking about interest rates. It makes a huge deal to the trends and the flows of the currency market because of the interest rate differential strategies done by institutional money market fund managers. And this is where they will borrow money in low interest rate countries and then go and park that money into high interest rate countries, which has a significant impact on the trend of a currency pair, because it's a strategy known as the carry trade, right? Now, we know many central banks have been cutting interest rates, so the US Federal Reserve have cut interest rates, European Central Bank have cut interest rates, the Bank of Canada have cut interest rates, but we know there's a few central banks which are keeping interest rates on hold, not cutting them as aggressively, and one of them is the Reserve Bank of Australia, the other one is the Bank of England. So we have been looking at flows in the British pound and in the Australian dollar, and this is why actually, if you look at it, Aussie US has been pushing up quite nicely, Euro Oz has been pushing down quite nicely. Pound Oz is actually going inside of a trading range because there's no difference between the policy actions of central banks, so no one has an opinion on whether that should be worth more or less, so that's a nice trading range. So actually, the focus that we've had over the past several weeks, you can actually see this in the economic data. So this will become interesting. Again, if there's any surprises, which the central bank, it could surprise the market, then that might create, some really good opportunities. So we'll keep an eye on any follow through if there are any surprises. But it's also an interest rate statement. It's looking to the future. What is the central bank forecasting for the future? Are they going to cut interest rates in the future? Are they going to still keep them on hold? This could determine whether we're going to get some profit taken in Aussie this week as we see out the end of the month, or if we're going to get more of a sustained trend. So we'll keep an eye on that. We also have the US consumer confidence report, and consumer confidence is pretty important right now in the US. Because we already know that FOMC, the Federal Reserve, they cut interest rates much more than expected, a 50 basis point interest rate cut rather than a 25 basis point interest rate cut everyone is expecting. They did that because they wanted to try to get ahead of what they see as some issues in the labour market, where their unemployment rate is historically low, but it is creeping higher due to the fact that there's some issues with the hiring of new jobs. Okay, the data shows it's weakening. Now, obviously, consumer confidence has a big impact on that because, of course, if people aren't getting any jobs, then they're not spending in the economy, and the consumer confidence will be down. So the economic data in the US does become quite important now to see whether there's actually going to be more interest rate cuts at a faster pace, or maybe if they're going to be a bit more stabilized if the economic data is good. So we'll be keeping an eye on these things and if there's any potential trading opportunities around them. Wednesday, with the Australian CPI report, that's consumer price inflation. Inflation is very important to currency traders because the inflation number is what dictates central bank policy decisions regarding interest rates. And basically, when inflation is higher, and this basically means the price of goods and services is getting higher, increasing. This is where central banks tend to increase interest rates to get people to spend less in the economy, to bring prices down, get them to save a little bit more because they can make a bit more in their savings account, just to spend less in the economy to bring prices down. When inflation is falling, okay, then the central bank tends to cut interest rates just to make sure it doesn't fall too far down to cause a recession and get people to borrow a bit more money in the economy and, spend a bit more and just get economic activity picking up. It's a bit of a balancing act, okay? So we'll keep an eye on any surprises in the inflation data there in Australia on Wednesday. And then Thursday, the SNB, Swiss National Bank Policy Rate and Press Conference. Now, it is widely expected the Swiss National Bank will be cutting their interest rate from 1.25% to 1%. And this is why actually the Swiss franc has also been a big theme for us, okay, over the course of the last week and a half, because we know that institutional traders position themselves ahead of events. Day one, learn Forex, how the market actually works. Thousands of analysts hired across the globe analyzing economic data and news so they can actually get their trading desks to position themselves in markets ahead of time because their capital size is so large. They can only build positions ahead of time rather than be market timers, which is what creates the flows in the markets for us to pick up on and also participate in. Now the attention has turned away from the Federal Reserve, the Bank of England, interest rate statements from last week, and now obviously the attention turns this week, the RBA, the SNB. And this is why if you look at a lot of the Swiss pairs, they have been pushing higher, okay, with the Swiss franc weakness. Now, a lot of them were pushing lower, so it's mainly trend reversals, been a bit choppy on the daily chart. But certainly, if you are building your fast time frame watch list inside of smart charts, which we do, then you'll notice that the Swiss franc pairs have been on them for quite some time. And by building your watch list, it helps you to identify where the themes are. What is everyone buying right now? What is everyone selling right now? If you're a beginner trader, you may not know why everyone is buying or selling that currency pair, but you can actually identify from the price action of the market, and just by building your watch list and looking at the correlation across your major and minor currency pairs. So we're going to keep an eye out on the flows in those Swiss pairs to the upside. Again, pairing up things like Aussie Swiss is obviously a good candidate with the strength that we're seeing in Australian dollar. So we'll keep an eye on any continuation in some of those pairs. And of course, if there's any potential trading opportunities on that day, on webinars that we go through, I'll try to highlight them for you as well. And we also have the US GDP report on Thursday, and Friday's Canadian GDP report. And GDP, gross domestic product, basically a measure of how much a country makes. Okay, total value of all the goods and services it produces, and it's just a measure of economic activity, the health of the economy. So again, it's any surprises that we get and what the market is expecting we want to be focused on, because that can cause a big readjustment of positions, some decent volatility, and then most importantly, any follow through on that volatility, right? And sometimes you just get really high volatility and just whipsaws up and down, and it's fine. You don't want to trade that, and there's nothing to do there. That's okay, right? The key is we're waiting for clues to develop in the market. It's basically our job as a trader, waiting for those clues in the market. And if we know what we're looking for beforehand, we have that preparation, so we can act confidently on opportunities and capitalize on them. All right, let's dive into smart charts and highlight some trading opportunities from the London and Sydney trading floors. Okay, so here we are in the smart charts platform on the daily chart of the 180 phase changer strategy, one of my favorite strategies inside of smart charts. And there's a couple of things going on here that seem quite interesting on this particular currency pair. So on top of what smart charts is finding, and if you're not too familiar with the rules and the strategies and how the smart charts technology, AI and algorithms are helping you, it's okay. In the e-learning portal section of smart charts, click on that learn tab. You've got all your workshops and slides and videos. There's a whole library of educational content there to support you guys in your knowledge and understanding of trading the market, different strategies as well. So I highly recommend you spend time watching those things, attending those webinars and workshops if you aren't already. But what we want to do is combine the power of algorithmic AI technology with human insight and human pattern recognition, okay? And what we can see here in Euro against the New Zealand is that we've been a bit range based, haven't we? So you can see here we've got a small trading range that has developed, and we'll be looking for price to break outside this trading range, because the currency market, it doesn't stay range based for long. It's very volatile. It will go through these ranges and then it will suddenly break out the ranges and start to trend. Sometimes the ranges can be quite small, and look, sometimes they can be really big, all right? But in this instance, we'll be looking for price to break outside of these ranges. And what we like here is that price has held in the moving average zone. So you can see sellers got below these moving averages on the chart, the yellow line and blue line, and they have held in this moving average zone, which is a very similar situation to here on the left hand side, where price got below the moving average zone and the sellers did hold in that moving average zone. It broke out and actually then it started this beautiful downtrend. So we'll be looking for something like this to develop, okay? Past performance is no guarantee of the future, but history does tend to repeat itself quite a lot in the financial markets. So in this instance, if price can break outside of this range situation and we're in that moving average zone, maybe we can start building off positions and a trend continuation developing. So on top of that, smart charts will also help you to do the risk management work, which is really the most important part when it comes to trading the financial market. It's important to keep that risk low. Make sure you're able to deal the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. Make sure you're able to handle the volatility that develops through different high impact news announcements as well. So in this instance, if we press the sell icon here, smart charts will populate an entry price at the blue dot, stop us at the red dot, target the green dot, do all the risk management calculations for you. This can all be adjusted according to your own user preferences, of course. We like to set an expiry. I like to set a current bar close expiry to the trade and then decline or accept the trade here at the bottom. Okay, and what that expiry does is it just ensures that, look, if sellers don't turn up to continue the trend, it just cancels the pending trade. You know, you didn't win, you didn't lose, it didn't actually cost you anything. All right, because of course we don't know if sellers are going to turn up. All we can do is be prepared that, look, the market is telling us there's a lot of clues here on why sellers could turn up. We've got confluence of resistance levels broken outside the range in the moving average zone. Last time we actually broke out the range on the left hand side in May, it developed as a new trend. So there's potential for history to repeat itself. If it does, we want to be ready and waiting to capitalize on that opportunity. If it doesn't, that's okay. All right, that's the first one. Let's have a look at something else that's developing actually, and it's on the vol reversal strategy on the daily chart on Australian dollar against the US dollar. So there's a couple of ways of playing the Aussie US. So basically for you intraday traders, we are looking for strength in the Aussie for all the reasons we looked at regarding the economic data coming up, and we've been looking for strength on Australian dollar on the faster time frames, but we are coming into zones where we can see, look, historically in the past, okay, the market has turned in this zone. All right, so we're playing it both ways. On the intraday charts, we're looking for the trend to continue at least up until the top part of the zone, and then of course we're not doing anything, but we're also preparing ourselves just in case we're going to get a round of profit taking from the strength we've been seeing in the Aussie US, and we're going to get a reversal as we have had multiple times in the past. Okay, so in this instance, we're just looking to prepare ourselves for the eventuality of a trend continuation on your faster time frames, like your pip runners, your 20 bounces, up until the top of that resistance level. But if it does turn where we are right now, which it could do, as it has many times before, we want to be prepared for the reversal, as everyone may dump their positions on these surprises from the RBA rate statements. So we can see we've got some really good clues the market is presenting to us here. Smart charts has helped us to highlight that. And if we click on the sell icon here, it will populate an entry price of the blue dot, stop us at the red dot, target the green dot, do all the risk management, portfolio management calculations for you, which can all be adjusted according to your own user preferences. And we also like to set a current bar close expiry and decline or accept the trade. And we're looking for momentum on the daily chart as well, which is why we use the current bar close expiry to capitalize on that momentum. So in this instance, let's see if we do get those reversals developing where we are right now. Okay, so those are just a few of the things being highlighted on London and Sydney trading floors. I mean, of course, there's a lot of different potential trading opportunities across multiple asset classes developing right now across the markets as well. Don't forget about your ideas tab here at the top of smart charts as well. There's some really good patterns that are developing with 85%, 86% quality that the AI has found. You've also got your price setups as well. So there's some really good trading opportunities developing here with more than 80% confidence on multiple asset classes. So there's plenty to be focusing on, okay, across today and across the weeks. The volatility has picked up, so make sure you're tuning into live trading webinars that are developing all throughout the course of the trading day, interacting with the traders live, asking them questions, and capitalizing on the trading opportunities that they're participating in as well. For now, that's it from me. All the best for your trading. I'll see you next time.